All right.
Yes,
Your support is nice. Bullish engulfing pin bar. Which one is bullish Kurami?
bullish Arami. Bullish Arami is also.
Arami. It is HARAMI, not KO.
Alright, sir.
Bullish
Thank you, sir.
engulfing. You're welcome. So that's Japanese yen. Yes. You are right. I love your chart. Let's compare it to mine. USD JPY, right?
Yes, sir.
Let's compare it to mine. USD JPY. So that we can see maybe you are already becoming a pro. Yeah. Okay. Yes, you can see we even have a trend line there. You can see that. So you can see that. So now this zone right here is a confluence zone. You can see we have a rising trend line, and we have a support here. Now we have a series of minor structures at this level. We broke this level to the upside. You can mute your mic. If you have questions, you can then put on your mic. So we have minor resistance here. So we swept this high all the way back. Now, since price is coming back into this support right now, the first thing we have to look out for is before price went from this level, do we have some structures price broke or breaks before it went out? Now we have a series of highs here, and the highs here. Now we broke this high. Mute your mic, please. We broke this high up, but we failed to break above this high. But however, we can see there is a bullish strength in this market. Now market is coming back to this level. Likewise, those who are trading trend line, they're already monitoring these lows, this low. Now this low right here gave us a break of this structure. We have a high. Now from this swing right here, the movement of price went up to break this 1 and then 2, right? But right here price failed to break this level. So when price tested this low, we expected price to give us a break of structure to break this level, but price failed to break this structure. So because of that, since we failed to have a break of structure, then the trade right here, we have to be very careful if we want to buy, because we are not seeing a strong strength showing us that okay, this market will have a strong hold here. For instance, if price had broken this level up, remember we have a new break of structure, then we can say yes, price has a tendency to continue all the way up. Unlike what we had right here, low, higher low. Now this is this bearish swing which led to the test of this zone. Now after this bearish pushback, price went up and broke this high, this main high that gave us a bearish pushback, right? Now from this bearish pushback here, we were expecting price to give us a new break of structure, just like we had right here. We had our BOS right here. Now our expectation is to have another BOS right here, but price failed to give us a break of structure. So because of that, any trade we are going to take right here, we have to be very, very careful so that we don't enter into a trap. Now based on that, the next thing we have to look out for is, can this trade be a scalp trade? Because this is day chart. So if we are not seeing strong reason to buy from the day chart, it could be a scalp trade. Now what we need to do is to go to the lower time frame, like the 4-hour chart, and see what we have on the 4-hour chart. Now on the 4-hour chart, you can see our support is valid. On the 4-hour chart, we can see a strong support holding price, and then whenever we sweep this support, price always give us a what? A push to the upside. Also, there's a confidence factor right there. Right now, as a trader, I believe what you need to do now in this market, let me just put this right here. Now what we need to do right here at this level is we have to pay attention to the lower time frame, the 1 hour chart, and study the market structure. So on the 1 hour chart, we are seeing double bottom, but this double bottom hasn't given us a reason to sell, because based on what we had right here, you can see we had our low high here. This is a low high, and then again we have another low high right here, and then again we add our low high. But what we can see right here is we are now having equal highs and equal lows, and equal highs and equal lows tells us there's a balance between buyers and sellers. Unlike what we had at the left hand side right here, we have price breaking out of this level. But before price broke out, let's check the lows. You can see the massive rejections at the bottom here. So there's something we call sweep of structure. By the time you get into the advanced section, you will tend to understand what we mean as sweep of structure. Now I'm only trying to show you the reason why we bought right here. You can see we got a low right here, and not just an ordinary low, it was a lower low, lower low, lower low. We can see from the top we are having low high, low high. That is a downtrend market movement. After this downtrend market movement, price got right here and the price went up. Then we had a higher low, price came back. We use this level as a structural liquidity or trap, and price came down. And then as well, study what happens at this level. What I'm telling you right now is based on market structure. So this was equal highs. Equal highs told us that the buyers failed to break this level to give us a break of this high. Since we have a failure of break of high, it tells us if price is coming down, there's a higher tendency for this level not to hold. The same concept I'm trying to explain at the front side. Now because of that, price did what? Price crashed all the way to this level and tested the previous low. So the candlestick we got right here swept out this low and gave us a strong reason to buy, and then price went out. Now for us to look out for a buy whereas we are still seeing lower high and the break of structure to the downside. You can see right here we have break of structure to the downside. We had break of structure to the downside, and then this is T equal lows. Price is yet to break down. Now you can see from this low high we were expecting price to give us a break to the downside, but price failed. Whenever price gives us a low high, it always gives us a break of structure for a lower low. From this section right there, break of this low, that is break of structure to a lower low. Now our expectation is, okay, let's have a break of structure to downside, just like right here we have BOS, and the right here we add BOS, and then at the top we have low high, at the top we have low high. You can see the low high telling us market is coming down, the momentum is down, and then again this our what? Low high. You can see that. Now this market is still in a downtrend. The only thing we can see right here is equal lows. So equal lows tells us there is now weakness in the downtrend. So what we need to see now is either for price to take out this low high, then come again for structural entry for us to find our possible higher low in this market to continue all the way up, right? Another way around is price can use this double bottom as a liquidity, whereby which we call static liquidity. So price can go up, come to this level, then make entries right here before it goes up. So this will be something like static liquidity. We are yet to get to that section, so I'm just trying to give the analysis to you based from the advanced market structural mode, right? But what I'm seeing right here is I'm already seeing weakness in the downtrend, but we are yet to see reason to buy in this downtrend. But price is coming to a support, and price coming to a support does not guarantee for a buy. There are other factors you have to combine before you make decisions you want to buy in this market. But for us to be on the safer side, we have to see a total destruction of this downtrend into an uptrend, which means from this level all the way down, we have that, down we have that, down we have this. Our expectation is let's come down, but we couldn't see that yet. So let's see if price can come like this, give us this break, which has never occurred before. If it gives us a break, we wait for a pushback for entry. It's possible that might happen, or it goes down. Use this right here as a liquidity before it now goes up. So that is what we are going to see. So for you to be on the safer side, my brother, what you need to do right now is we have to first see how price can create liquidity, because liquidity is what makes the money. The first thing is we have to ask ourselves, if I were to buy in this market, let's say for instance, if I were to buy in this market, or if I waited for price to break out, comes right here, if I'm making an entry here, where would I like to place my stop loss? I would love to place my stop loss right there. Now, what would make the market to come back and hit my stop loss? Yeah, so that means price may want to use this zone as a liquidity. So if market comes right here, it takes out my stop loss, then continues. Now, what can I do? The only thing you can do right here now is to have your stop loss underneath this structure right here. So which means you have to look for a way whereby you make possible entry at the stop losses of some other traders and place your stop loss down below, so that someone's stop loss should be your entry model, whereby you ride the trend all the way up. So this is based from professional aspect of trading. And then if you make your entry from this level right here, that will give you a 4:1 ratio setup probability. So that is the way I analyze your support and resistance. So your support and resistance doesn't just mean, oh, prices are support, just buy, just sell from resistance. No. If you do that, most of the time the market will use you as liquidity. So is that understood? Even though it is not
understood. Yes, sir. Understood, sir.
All right. So that is it.
Yes, sir.
So that is it. Now let me check your other assignment. So this is, what is this currency pair? GBP USD, sorry, GBP USD. Okay. Now let's check it. Let's check it. GBP USD, this 1 hour chart. Let's find that out. GBP USD, and this is May. Okay, May. Okay, this is nice. This is nice. This is nice. This is nice. Support. Yeah. This is nice. I can see how price came back to this level. Price went up before coming down. Now this 1 hour could be as references, strong actions from the higher time frame, because viewing this right here, market went through consolidation. Price broke out this consolidation. Price came back here, just like what I explained earlier in the previous setup. After price came here, price went up, came down again, then looks as if it's going to use this zone as liquidity, and then goes up again, then comes back. So the question we need to ask ourselves is, what is really going on the higher time frame? So 1 hour chart of GBP USD, let's track that. Let's track that. GBP USD, let's track that. GBP USD, let's check out the 1 hour chart. That was around May. You went through around May. So we are going to check May. If I were right, May, March, April, May. Okay, this is where you constructed your support and resistance. Okay, this is May. Now let's check it out on the 1 hour chart. Let's go to May. Okay, I found out your chart. So this is your chart. This is the chart you marked. Now you can see that. Now,
Yes, sir.
Now what we add right here is price rallied. Yes, the market is in an uptrend. Now we got equal highs at the top, equal highs at the top, equal highs. Now this phase is telling us that there is now weakness in the market. There is weakness in the market, so we already know that. So in fact, now what happened right here is just a retest of this high, because you can see up when price moved from this support here, it went up, failed to push above this high. Now this is the first indication that, oh yes, these highs here are strong highs. These are strong highs. Price got rejection right here, came all the way down, and this way support. Now we move through this medium like this, like this, like this. So this is a sideways market. Now we should be looking for possible buy at the bottom. So this sideways market failed and price rallied all the way down, and the market switched to the downside right here, right? So this is why you need to have stop losses in place. Things like this are inevitable. You can see how price went down, price still continued and went up. Now let's combine the power of higher time frame, which is top-down analysis, to see how we could have done this better. All right, based on what I'm seeing on the higher time frame, we could have bought at this level as a sweep of this level, but the market didn't just confirm our trade. So there's nothing bad about buying here, just the market didn't confirm that setup. So there's nothing bad about that. Let's go to the day chart before we make our final judgment. So the market is in an uptrend. Let's check the day chart. We have our support here. Okay, we are trying to buy up. In fact, nothing is bad right here. What actually happened right here is market just induced. It was inducement plus liquidity. We are yet to do that. Market induced, we call it IDM. Market formed a nice support for traders to buy. After they bought, it takes them out and then take out their stop losses. Then their stop losses turn into liquidity, and this liquidity failed the market. So things like this are inevitable. After this is inducement, this is where we have liquidity. Then later the market continue upward. So that is an advanced market structure analysis. You are yet to get there. So there's nothing bad about that based on your level. But what happened right here, the market induced traders and then fuel liquidity to move the market. So your support and resistance is okay. It's okay. Now let's move on. You can see right here it worked perfectly well. Went up. This is the chart of GBP USD. This is also nice. This is 4-hour chart. Let's check the 4-hour chart, GBP USD. GBP USD 4-hour chart. Oh, I haven't checked the okay, July. GBP USD 4-hour chart, July. Let's allow this chart to load. Okay. Now, if you check this chart right here, you are going to see, okay, let me go back to your chart. $4-hour GBP USD That's around 26th of June. Yeah, 26th of June, not July. 26th of June, because I was checking this. I know this now. 26th of June. 26th of June. Let's go back to your chart. 26th of June. 26th of June. And the next time when you are sending your assignment, always put your cross share or you write down the date of the zone under the chart you send, so that it will be easy for your teacher to be able to get the period. Because I'm just trying to get the, okay, this is, in fact, this is 2024, not 2025. You can see now, this is 2024. All right, don't worry, I've gotten that. We are going to 2024. Don't worry, you can mute your mic. 2024, because I'm just trying to get that. So 2024.
Yes.
All right, I got it. This is the chart right here. Now 2024. Okay. Yes, let's check the overall trend. Of course, we have market coming from this bearish push all the way down. We have push, low high, break of structure to the downside, push, break of structure to the downside. Now we went up, higher low, higher high, equal lows. We went all the way up and we broke this series of highs, and we broke the main low highs, which pushed back into this lowest low or the trough. Then we move to this side. We already know we are in an uptrend market structure. Now we push back again. After we push back again, we study market structure right here. Now let's do that. So now let's study the market structure. We already know we are in an uptrend market structure. So we add our low. Let's zoom in. Now we had our first low here as lower low. Before that, before we start marking support and resistance, first let's study the market structure we had. Market structure is very, very important. Okay, now look at this market trend. We had equal lows here, and we have highs. We have another slight high, slight rising high. We have our peak of this market here. Based on what we have right here, we have higher highs and equal lows. So this is telling us we have a definite support here and price is still going up. Now price is not rising at the bottom, but it is rising at the top. So this shows us that the buyers are not so strong. Sellers are not showing interest, but buyers are still larger than sellers. But we are not seeing strong strength from the buyers. So later on, the price went all the way down, and price went down because of this equal lows. Now imagine we have something like this, like this, like this, like this, like this. This could have been better because the higher low shows us there is strong buys in the market, and the break of structures give us another second strong buy reason or sentiment. But right here we only add at the top 1, 2, 3, whereby at the bottom forces of buyers and sellers are at equilibrium. So we shouldn't see equilibrium, we should see total dominion from buyers at the bottom and taking price above top. So okay, now let's get back to our analysis. First thing we do market structure, then we decide where the market is going. So this highs, we broke this structure right here. This is low high here. We broke this structure right here, lower low, low high. Now once again, there is something you are going to notice whenever price wants to reverse. Market will always change into equal lows or equal highs. You can see that now. Your equal lows and equal highs is telling you market is losing momentum or losing strength. So whenever you see equal highs or equal lows, it says a lot. You're a trader, you have to pay attention. Now you can see that. Now when that originated to our support. Now we saw our last low high here, low high here. This is our double low highs. Before a market changes, it has to break two successive low highs. So right here we had our low highs, but at the bottom we're already seeing weakness in bearish momentum because the sellers are pushing price downward. So we shouldn't see sellers giving us equal lows. Sellers should be giving us break of structure to the downside, break of structure to the downside. So whenever price is giving us break of structure to the downside, it shows us the sellers are more active. They are still in dominion of the market trend. So since we are seeing equals now, it's telling us buyers and sellers are now struggling. There's not a battle going on underneath this structure right there. So this is what we are having on this market trend. So now, since sellers are struggling to break down and buyers are repelling the sellers, now it shows us there's a higher tendency for price to reverse or to change the direction. So our last low high here was taken out here, but not through a body. We came back here and then we rallied all the way up. So now this candlestick is the buy trigger for this upward movement. So someone like a trader like me, I would have missed out on this trade if I were to buy this trade right here, and I will tell you the reason. But I could have bought at this level right there based on this sweep of this level with a bullish engulfing bar or three inside bar. So I could have bought right here, but let's see the reason why I could have bought right there. Let's see if there's a level being aligned. Okay, this is just a retest rate. Okay, retest right here. So this is a break and retest concept. You can see right here we rallied here, high, higher low, break of structure, higher high, equal lows. We broke this level, then we transferred price up, then we tested here, we continue. So this is a break and retest. Now this break and retest comes with another confluence factor. So first thing we had right here is a break level right there. So you can see we had a resistance at the left side of our screen here. Now we connected this resistance to the right side. You can see that after price got to this right side here, we zoom in on our price chart and we patiently studied to see how price was reacting at this support we constructed. We discovered when price got there, then price started giving us equal bottoms. You can see right here the first rejection and then the third rejection, second rejection and the third rejection. So right here this is showing us sellers are struggling while buyers are showing power. Now let's check once again. Let's zoom in again. So based on this market right here, what could have happened is I wouldn't have taken any trade right here because I'm not seeing this candlestick as a very long candlestick. This is the type of candlestick I would love to use as an entry. So I would have missed up on this trade based on one reason. Number one, I would want price to first take out these highs. Price has to take out these highs. When price takes out these highs, then I will use the advanced market structure. Then market has to come back because there is something we call order block here, which market has to come and fill, and what we call fair value gap here. So there is OB and fair value gap right there. So once market take out this low highs here, I know the market is showing me probability of going up. Now market has to push back into this level for me to use the level here as my entry. So this is the reason I would have missed out right here. However, those who use support and resistance would have taken advantage of these buys and these buys at the low. I would have used this level as a sweep of liquidity, but the reason I wouldn't want to use it because what I'm seeing right here is not a kind of nice deep sweep. Imagine it went all the way down and then sweep it up like this. I will take that as a wide dip. That means bottom first. The first bottom goes down, then sweep. But in the case whereby I'm seeing something like this, I don't like this kind of small sweep. I want it to go down more deeper. Yes, I can see a nice distance away. So that is the reason I wouldn't use this sweep right here as my support. Instead, I would want price to what? To take out these highs here, then come back into this OB with my fair value gap zones right here. So that is that. So 100% to your support and resistance. It's perfect aligned, so it's nice right there. Let's check out that one. Now we went through the ranging market structure. This is your ranging. Are you right there? Can you hear me? Do you understand everything? Are you getting along with me?
Yes, I'm hearing.
All right.
Yes, sir. Yes, sir.
All right.
Yes, sir.
Now let's check this ranging market structure from range to up push and back to the downward swing. This is the British pound sterling USD. It seems you like GBP USD. Are you a GU trader? The only currency you trade is GU? Oh, that is good. You don't have is your favorite currency pair GBP USD?
Yes, I just want to be perfect on one, sir.
Oh. That is the best. That is the best. You chase one rat, trying to chase two rats.
Thank you, sir.
You are welcome. Trying to chase 2 or 3 rats, you miss everything. But when you focus on one rat, you concentrate your energy and you eventually get it. So that is best. So focus on GU, master everything that moves the market, master the patterns, and then you're going to make money out of the market. It's not about quantities, it's about quality. That is good. Now,
All right, sir.
you're
Thank
welcome. You're welcome. So GBP USD 2 hours chart, from up switch to range, back up, but we failed to break above this high. Now the reason why market came all the way down and fell down, imagine we'd gone above this structure right here, that would have been break of structure. Everything going right here is internal range. This is internal range. So in advanced market movement, we call this internal range liquidity. So market induce us to buy right here, or induce some to buy based on retest of structure. Sorry, I need to check something. Just give me a few minutes.
Okay, sir.
All right, I have something to show you. If you are a trader, you can check it out. I'm monitoring a trade right here. Let's quickly get into it. So after the trade, you could check it out if you are okay, if you want to trade it. The trade has already been sent out. It has already triggered. I just want to show you so that you can take advantage if you like it. Now let's see what we have in this market from the day chart. Okay, thank God, it's based on support and resistance as well. Now from this level here, we have support. You can see support here, price went up but couldn't break this high. Now we have our support here. Now we went to the 4-hour chart. You can see that. So we have support here, price went up, price got rejections right here. So we haven't yet seen technical reason on the 4-hour chart. Now let's go to the 1-hour chart. Now let's go to the 15-minute chart. Now on the 15-minute chart, we have this. So on the 15-minute chart, actually this is trade for scalpers. This was sent out to scalpers and day traders in the community. So market structure first, higher low, low high, break of structure, low high, lower low. Now what happened right here? Price went into consolidation. Right here, price went into consolidation. It continued all the way down. Now right here, price went into consolidation. Instead of it to continue down, what happened? It broke this high. Now this is the first time we are having price taking out a what? A low high. Low high taken out right here. Low highs were not taken out right here. Low highs were not taken out right here. Low highs were not taken out right here. This is a kind of very sideways market. This is range liquidity right here. So we leave that section. Now from this section, market was trending all the way down. Now we broke this low high here, we went all the way up. Now we broke the first low high, we broke the second low high. So there's something we call choke, change of character. I don't know if you heard about that. Change of character means price is changing its course from this movement here, bearish, bullish, bearish, bullish, bearish, bullish. We should say bearish, but we are seeing bullish, taking out this level and this level. Now we are having change of character. That is what I call change of character. Some will call the first break here as a change of character, but I prefer to call 2 breaks a change of character, because sometimes price may do what? Price may first take out these lows, this low high, and then continue back. But this time around, it went so far to take out this and this. So this is what I call change of character. The first takeout right here, I call it internal switch or internal change of character, where this is the external change of character. So 2 swings taken out is what I call change of character. So now we have price going all the way up. So since you have gone all the way up now, price came back to this level, and then that was a buy. The buy came in at this level. Now let's check if there's news release, because news is one of the reasons that could make this market to be falling so deep like this. So let's check if there's news, because if the news is against the technical, the news will move the market. Today is Thursday. Let's check out if there's any news going on right now in the market. USD, the time is what? 2:40. 2:40. Let's refresh this. 2:40 p.m. Thursday. There's bank holiday. CPI only on Swiss. Okay, there's no fundamental today. Tomorrow is Friday. So let's get back to price chart. Now market is pushing back all the way right here. So let's check the 1 hour chart to see the reason why market is coming all the way down. Okay, based on what I'm seeing right here, some traders actually wanted to use this zone as a buy entry. So buy entry here, stop loss has to go below, and this market goes all the way up, all the way up. Now let's check 4 hour chart. Let's see what 4 hour is doing. Now on the 4 hour, this is the last lower low here. So let's see the sweep. All right, now price swept this. Let's check the day chart and see what happened yesterday. All right, yesterday wasn't a nice bar. Today is pushing back. We are not seeing a strong daily candlestick, but we are seeing 4 hour building up. Let's go to 1 hour. 1 hour. Okay, this is a pushback. Now let's go to 15-minute chart. 15 minutes. Now to trade this market now, 15 minutes has to be the point whereby you monitor this trade. You monitor this trade on the 15-minute chart to see buy entry. Now confirmation is the only thing you should be waiting for on New Zealand yen. No confirmation yet. So in the next 15-minute chart or series of 15-minute chart, if we can see another bullish candlestick going up again to close this buy here, then that will be a buy entry to continue this market to the upside. So currently right now, what is going on now is market is trying to cut out some people who have made entry based on this false approach here. So market could still come all the way deep down, take out these lows, come down, then sweep it for buys. So that's what I'm seeing on New Zealand yen. So now New Zealand yen is still right there. So let's see. That's what I'm monitoring. It's yet to be confirmed. I think the buy limit was being sent out, but that is why I prefer not to use limit order, because sometimes the market could be going through strong movement and your buy limit get triggered or sell limit get triggered, and the market keeps going deeper and deeper. You can see now, still going deeper. You can see that still going deeper. So if you're a trader, monitor this to see if this level is going to be your support based on the concept of support we've taught you or we are going through right now. So in summary, we have a support here. Now let's see how this level will prove its support. Maybe price get here, maybe it will go up, or maybe it will get right here and then find rejection and then go up. So that is what I can see on yen. However, like whatever price do, you have to be prepared for the worst. That is a trader. You have to manage your risks. So that is it. So now let's proceed forward. I just wanted to let you know about that. All right. Now let me check your other assignment. All right. Now price.
Yes, sir.
I'm with you.
Yes, sir.
Ask your question. Can we go on?
Yes, sir.
All right. So ranging market. This is a low high to this high. Yes, it went all the way down. Yes, your market structure is right here. You can see, you already know what I wanted to explain right here. Because this level broke out here, it is still a low high here. If it had taken out this high, then we know that market is trying to go bullish. Yes. Taking out this series of equal highs right here does not mean the market is bullish. That is good. Now, ranging market, bearish market structure. Now, you put something here as a low high. This is not low high. You put LLH. Can you please explain this?
It should be lower low, sir. The L there is a mistake.
How is this lower low? Because I'm seeing high here, and this high is greater than this high here. Only if there's another highs at the left hand side, which I'm not seeing on this picture.
I was trying to go through the chart, but my network is very bad.
You have to be sure of what you are doing before you mark your chart. Let's check it out. GBP yen. I can't even see the year. You can see now, you already cut out the year. I can only see 10th of July. I don't know, maybe it's 2024 or 2025. Anyways, let's go to GBP USD yen rather. Let's go to USD yen and see what we have on the chart. How many minutes time do we have left?
We have like 15 minutes, sir.
All right. It's possible you might see a trade in this live class for scalpers and day traders. Although I'm not a scalper, I'm not a day trader, but I'm seeing possibility of a trade for day or scalpers, but it's not yet confirmed. So let's go to USD yen.
Oh, sir.
USD yen. Can you tell us the dates?
Hello, sir.
Can you tell us the date of this your chart? I can't really know the dates, exactly dates. Is it 2025 or which year?
It should be. I'm trying to go through my chart, but the network is still loading. I don't know.
Let's quickly go to 10th of July and see, maybe you are trying to refer to 10th of July. This is 10th of July now. Let's go back to the chart. Okay, I've gotten it. Now you can see I was right based on what I said. You can say only if you treat this eye to this eye, that is the only reason you can have low eye. But if you are treating this eye to all this eye here, this is a higher high. That is what I just wanted to point out there. This will be a higher high and not a low high. So it is not be low, nothing like double LH. See that one L and H, low high.
Yes, sir. It's a
or
mistake.
or double I, which is higher high. Okay,
Yes,
so that is it. So you have to correct that. This is not acceptable. This is not a low high, and this is a higher high to all this market here. And then if you are trying to point out a higher high or lower low, you have to make references to the last highs. So if you put this right here as equal highs, then we could say, okay, this is a higher high. Since you're not putting it there and we can't see on your picture, maybe you are tagging the previous highest point as a higher high, so we can't really ascertain this. So this will be strike out. Let's move on down. Now GBP USD 3-hour chart. Also, there's something I want you to take note of. Stick to, should I say, okay, hang on, I think there's a student trying to communicate to me here. Hang on. Hang on. Okay, now try to stick to even numbers or numbers that can be divided by 4. Now, if I say even numbers, you may be using other time frame, but let me just be specific in my time frames. Now, I can't say even number because there are some numbers here which cannot be divided by 2. Because even numbers are numbers that can be divided by 2. But let me just give you the summary. Try to stick your time frame to 15 minutes, 1 hour. Mute your mic. 15 minutes, 1 hour, 4 hour. Because I can see you going to 3 hour, 2 hour. Those are not a, can I say, relative or kind of a well-aligned time frame. Day, okay, weekly, monthly, 3 months, 6 months, 12 months. Those are well-aligned time frames. So going through those 2 hour, going through those 3 hour, I will advise you to ignore those time frames. Those are not well aligned. Because the next time frame to 3 hours should be 1.5 hour. And nothing like 1.5 hour. The next time frame to 2 hours is 1 hour. You can still use 2 hour, but I don't use it. But that 3 hour is out of the league. It's out of the league. Right? So I'm seeing 3 hour on your chart. Do away with those time frame. You are only taking advantage because you are using TradingView. On the normal other trading platform, you may not see 3 hour. For example, your MetaTrader. What happens if you are using MetaTrader? You can't see 3 hour. So stick to rounded or the common time frames like 5 minutes, 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hour, day, monthly, 3 months, 6 months, 12 months. Those are well aligned figures or time frames. Also, you see, you have a lot of things to do on your chart, on your trading, because you are here to favorite your time frame. Now, the only thing you have here now is 1 hour. You can favorite your times instead of having just one. Now, check this. To favorite your time, you move your cursor and put it on this arrow beside your time. Then you click it down. Once you click it down, then you click on this tab button there. So you can able to add more time frame. You can see that. So you are here to do that on your chart. You can see. What you just need to do now is to move your cursor to this section here, click on it, you'll be able to add more time frame.
I have favorite those hours time frame now.
All right, good.
Yes, sir.
So 1 hour from here, bullish market structure. Yes, this higher. This is right. Then ranging all the way down. This is channel. This is a channel. This is a trending market. No, this is not a ranging market. This is a falling channel. So this is a bearish market. It's a trending downward market. It's not a ranging market.
Yes,
so yes, correct this one. It's not. This is not a ranging market. This is a higher low. This is what? This is a higher high, and then this is equal lows here. This equal lows. All right. So modify those errors, On the right here, higher highs, higher low, higher highs, higher high, low high, higher low, low high, lower low. Yes, this is correct. Low high, lower low. This is wrong. This is not lower low. This should be around higher low. This is wrong. This is not lower low. Can see this low here is not going below this. So this is wrong. This should be higher low. And this right here is not a low high. It's either it is equal highs or higher highs. It's not a low high because this level now only if I'm not seeing it very well. If I'm seeing it here, it's either you use low high. And then again, this level is not a low high. These zones here is your low high. So try to correct that. How many minutes do we have left? Now
6 minutes, sir.
Okay, now you can see right here now. This is what we call sideways market here now. So you don't need to put all this right here. You can't trade this market. This is sideways or choppy market. In fact, just sideways market here. So all this low high, low high, low high, low high. It's just repetition. So just put equal highs. Everything here is equal highs. Everything at the bottom is equal bottoms. That is equal lows. So nothing like this. This is not a bullish. This is sideways market structure. So you correct that. This is sideways market structure, not a bullish or bearish market structure. So you got to correct that. Higher high, higher high, higher low, higher low. Yeah, this is bullish market structure. Higher high, higher, higher low, higher low. Yes, bullish market structure. But the main trend is bearish. This is what the counter trend. Corrective move here. Okay. Now you are doing good. There is performance, great performance, but I believe you can do better.
Thank you, sir.
Yeah, I can believe you can do better. So apart from what I've assessed, do you have any other question?
No questions, sir.
All right. So if there's no question, I will give you my assignment.
Okay, sir.
I want you to mark more support and resistance more on your chart.
Okay, sir.
So mark more on your chart and revert to me in the next class.
Okay, sir.
Right? So have a wonderful day. When is our next class?
Next week, sir.
Next week. Next week what?
Tuesday, sir.
All right. So
Thank you, sir.
Next week Tuesday. Do you
Yes,
have
sir.
classes on Wednesday?
Yes, sir.
Okay, your classes are Tuesday, Wednesday, Thursday.
Yes, sir.
All right. Okay, thank you. Take care. All right.
Thank you, sir.
Yeah, good night. So guys, this is how we hold our online class. You can see I communicated with the student. The student also communicated with me. We converse freely. I can see his screen. He sent his assignments. He can see my screen. So this is how we hold our online class, and that's where I can tell him opportunities on scalping, on day trading, even though I'm not a scalper or day trader. And I told him how to approach it if there's something which can give a bullish surge here. So that is how our online class goes. So what are you waiting for? Are you a resident of Ibadan? Because our office is located in number 64 Ibadan, Mokola Road, opposite State Veterinary Hospital. And if you're not a resident of Ibadan, you can join our online class. If you're not in Nigeria, you're in diaspora, wherever you are in any part of the world, London, Germany, Canada, wherever you are, you can join our online class. All you need is your internet enabled devices. Could be your phone, your computer, your laptop. You access the class, we talk, we communicate. It's not a PDF class or recorded class. Also, you also have another opportunity after this class. I'm going to send a copy of this class. That means this class is currently on record, and this is why you can watch this class. Although we broadcast this live class and send the link only to our student, so it's only accessible by our registered students. So what are you waiting for? Become a VIP mentorship student today. Learn how to trade forex, crypto, stocks, commodities, and index market at the comfort of your home and start making money. Once you get these skills, you can also teach your wife, your husband, your children. Your child can teach the father, mother, or your brothers or your loved ones, right? So check the links in the description of this video and take action today. You can as well use the link down below to join our Trading Signals community. I will see you in the next one. Peace.